Hello and welcome to Unacademy IAS. SEBI, the market regulator, has issued an interim order directing Rajesh Exports, a listed entity, to furnish all the correct details and also has imposed a certain restriction on the CMD of the company. The issuance of the order has led to crash in the market prices of the shares of this company. Retail investors have lost thousands of crores of rupees because of this, and now there are concerns being raised regarding the investment strategies used by LIC. What are the issues involved here? Let's decode one by one. Before I start, here is a very important announcement. The Unacademy IAS courses right now are available at a discounted price of 17,999. Those interested in enrolling into our classes, do check out the details by clicking on the link provided in the description below. And whatever is the price mentioned in the website, use the code IAS English to get the discounted price and also get an extension of up to 18 months free of cost. Let me begin the discussion. As already mentioned, Rajesh Exports is a listed entity. This is involved in refining of gold and manufacturing or producing gold products. This entity now has been investigated by SEBI and an interim order has been issued by SEBI. The two most important directions the SEBI has issued to this company is one, the company has directed the company to furnish all the correct details. And second, it has imposed a restriction on the promoter and the CEO of this particular company. Now, what are the issues involved here? Let's decode. This company's finances from the financial year 21 to financial year 25 are under the scanner of SEBI. For these particular years, it has reported a total income of 15.5 lakh crore rupees. Out of this 15.5 lakh crore rupees, SEBI is worried that 15.15 lakh crore rupees could be misrepresented. In simple layman terms, SEBI is concerned that 97 to 98% of the total income reported by this listed company is not accurate. It could be overestimated, it could be inflated to simply show that the company is generating huge sums of money. And because of this, an order has been issued and the company has been asked to furnish all the correct details. Now, why has the SEBI investigated the company in the first place? Back in the year 2024, one of the investor has looked into the financial statements issued by this particular company. And from the financial statement, there is one transaction which has been reported, which has been flagged by this investor. And that transaction essentially is trade receivable. Trade receivable which has remained unrecovered, which has not been recovered or not repaid for a period of 2 years. The basic idea is simple here. There are companies which will sell raw material inputs to other companies. And for this, the payment is not done immediately. Generally, certain time period credit cycle is provided and the buyer makes a payment after certain time period. In the context of MSMEs, the time period generally provided by these is 45 days. Now, what is the importance of this? Let's say there is this particular company which has generated very less amount of income, but it will keep on reporting transactions such as a trade receivables in the form of, right, let's say income statement, or it will report these transactions, consider these as part of incomes. And when they'll keep on reporting more and more, the argument is simple, the total income generated or earned by the company according to the financial records will also be higher. But the concern is very simple. The companies, whenever they want to inflate their numbers, simply show that they are earning more amount of money, they will keep on recording these kind of transactions which will increase the size of the revenue, which will inflate the revenue numbers. So generally these kind of misrepresentations or right fraud transactions are considered by the companies to inflate their revenue. Now, what is the argument that has been put forward? What is the defense that has been put forward by Rajesh Exports? Listen to me carefully. SEBI basically says If you look at the total revenues generated by Rajesh Exports and also consider the revenues reported by the subsidiary companies of Rajesh Exports, numbers do not match. What is the meaning of this? This entity, Rajesh Exports, is present in India. It is listed in India. It also has subsidiaries which are operating across the world, that is outside India. The company simply states that the way the numbers are reported by other subsidiaries outside India, the methodology is slightly different. But SEBI simply says if you take the numbers reported by the subsidiaries of Rajesh Exports, imagine there are three subsidiaries A, B, and C. And if you basically take the numbers, that is, incomes reported by all the three subsidiary companies, and then try to compare that number with the number that is reported by the parent company in India, basically SEBI says numbers do not add up. Right? Numbers, there is a huge difference, and that's the reason 97 to 98% has of the total revenues of the company has been flagged by SEBI. It says there is a misquoting, misrepresentation in this revenue. Now, there is a parallel to this. What is a parallel? Lot of experts have looked at this and simply stated this is looking something similar to what happened back couple of decades ago in case of Satyam scam. In case of Satyam scam as well, there was the same issue. The company, which was a software IT company, basically has had misreported, inflated their revenue numbers or income numbers. And the auditor at that point of time, PwC, it had basically ignored or missed flagging these particular, right, let's say fake invoices. And that actually led to a scam to the tune of 7,800 crore rupees. The stock market prices of Satyam company crashed. Lot of investors lost their money, and that became a big issue in terms of corporate governance in India. Now, the same concerns are being raised in the context of this listed company, Rajesh Exports. Now, what are the implications of this? What are the important implications? Let's understand that as well. First and foremost, the retail investors have lost huge sums of money. According to SEBI, more than 12,000 crore rupees worth of investments has been lost. That is the first one. Second very important implication is this particular company is also involved in scheme of the government. The government of India, specifically the Ministry of Heavy Industries, MHI, has launched PLI. This entity is one of the beneficiaries under PLI. Now, MHI has announced that it would be removed, that is, this company would be removed as a beneficiary from PLI. So, there is a spillover effect like this. Third very important implication is multiple banks have given loans to this entity, Rajesh Exports. And some of these particular banks have already classified their loans as a stressed asset. As stressed asset. Now imagine SEBI's concerns may basically turn out to be true. That is, this particular company is inflating the income numbers. There is a huge fraud that has taken place, etc. As a result of this, more and more of the loans which have been issued by the banks to this particular entity might become non-performing asset. That would be one more hit to the banking sector. And the fourth and the very important implication in this context is the investments which are done by LIC in the company. LIC has around 10.8% of shares of this particular company. And it is very interesting to note that a lot of institutional investors, such as insurance companies, pension companies, or for that matter, mutual fund companies, they have stayed away from investing in this particular entity because many of these particular experts have stated that the numbers don't look correct in the context of this particular company. That is, on one side, the company has reported huge sums of income. The total income reported are generally very, very high. But when you compare that with the profits reported by the company, the numbers don't make sense. Although, right, on behalf of Rajesh Exports, because you need to understand both the sides of the coin, Rajesh Exports has been defending these numbers and stated that the margins in this particular business are very, very less. And that is the precise reason the income could be higher, but the profitability are lower. But anyways, in the context of LIC, now there will be questions asked or concerns raised regarding the investment strategies that are being used by LIC to invest their money or the corpus in these kind of companies. If other institutions are staying away, why is the LIC making investments in this? And that too to the extent of 10.8% of the total shares of this particular company. And mind you, LIC is using this particular money to invest from the corpus which has been invested by, right, let's say common man such as you and me. If the LIC's investments take hit, then automatically the returns that are given to the investors will also be hit. So these are some of the very important implications in the context of this episode of Rajesh Exports that is happening currently. But more importantly, let's look at the macroeconomic picture here. If the concerns turn out to be true, this can be a big blow for the overall corporate governance in India as well as the stock market confidence. Already, the stock market in India has experienced huge outflows because of foreign investors taking out money. And that, in fact, has led to even the depreciation of Indian rupee in addition to stock market being hit. Now, in this particular duration or at this point of time, if the scam to the extent of let's say 15 lakh crore rupee is unearthed, is reported, comes to light, it will be a big blow to the overall stock market as well as the investor confidence in India. What are your thoughts regarding this? Do let me know in the comment section of the video. If you have liked the discussion, do not forget to hit the like button. If you are yet to join the Unacademy IS YouTube channel, join the channel right now. Thank you. Have a great day.